Google stock is up 45% since my Google analysis video on May 12th. Back when Google was just 160 a share, I personally considered Google stock as a buy for my own financial journey. In that video, Google is now worth 230 per share, up 45%. Google has dodged a big bullet. DOJ ruled that Alphabet will not have to sell off Chrome as part of the antitrust case. However, Google will have to sell search data to competitors. Google has manifested a self-sustaining wheel. Users search in Google, which is then used as data to train for better search results and ads, and the cycle starts anew with better search. The idea here is to have Google sell this data to competitors to help improve the search engines of other companies. This is not all. Apple Siri upgrade may be powered by Google's AI LLM called Gemini. So Google has been on a great win streak. Literally, the day Google looked like the worst thing to own when Apple said Google search in Safari is down for the first time since 22 years was the perfect day to buy Google. This is where value appears in the market. When there is market hysteria, when there is fear in the market, when there is an unjustified sell-off, that's where asymmetric upside for investors can be found to make money. And we successfully called this one out. I am not right all the time, nor do I aim to be. I am only sharing with you my personal financial journey, and I hope you were there, and I'm thankful you are here now. Google is going to face some volatility. Google has went up a lot in value recently. However, I believe Google still has plenty of runway to go. They have AI, they have Gemini, they have Waymo, autonomous vehicles. They're competing with Tesla, they're competing with Amazon's AWS through Google Cloud. Google has properties like YouTube in massive domains competing in many sectors, and I think Google will be a great position to have in the long term. Last week, my AI model correctly predicted that the 227.5 strike price for Amazon would be in the money by end of week, as Amazon closed at 229 last Friday, August 29th. The model was overly optimistic, since the model also predicted the 230 and 232.5 strikes would also be in the money. This did not come true. But these predictions are good for selling covered calls because I can collect premium on the 235 strike and avoid assignment. The model has had a perfect prediction last week for Google. It correctly predicted the 207.5 through 212.5 strikes would be in the money by end of week. This came true as Google closed at 212.91 on Friday, August 29th. We could have sold strikes above 212.5 to collect premium and avoid assignment. I like Amazon and Google for the long term, so I was extra conservative and sold farther out of the money calls for the week and pocketed lower premiums at lower risk. I generated $24 in premium for the week, which at first may not sound like much. But if you do perform this consistently every week, every month, then I could potentially generate $1,152 in annual premium selling weeklies on Google and Amazon. Selling weekly covered calls is not a get-rich-quick overnight strategy. The point here is consistency. To build a moat of stocks we want to hold in the long term and generate premium on these stocks we intend to hold onto for the long term anyway. The benefits of this AI model is to predict which strike prices would be in the money by end of week. I track popular stocks and ETFs in this video series with the main goal to sell covered calls for passive premium income. Now let's get into this week's predictions. We have some key economic data coming out. First, Thursday, September 4th at 8:15 a.m. ADP employment numbers come out. 75,000 is the median forecast, while the previous number was 104. 8:30 a.m. initial jobless claim numbers come out with a median forecast of 230,000 compared to previous at 229,000. US productivity, US trade deficit, and S&P final US services PMI numbers also come out. Friday, September 5th, we also have employment data. 8:30 a.m. is US employment report, US unemployment rate, and US hourly wages.